Testing, 1, 2, 3. All right. Good morning. Good morning. It is a Tuesday morning after a long weekend, and we are all ready and excited to get up and get trading. And so is the rest of the community, the world. They're all excited to get trading. Usually, the day after a long weekend is a good day because everybody's excited to get back to the markets. And that is what we are here too, right? Excited to get back to the markets. All right. Just a quick intro before the markets open. We got a couple minutes before the markets open here. We are in the futures market right now. We are going to switch over and look at the stock market. I've got some, I guess we decided that at the first of the week, we're going to do seasonal trends, and we can do that both in the futures market and in the stock market. This week, we're going to do the stock market. And so we're going to go look at the seasonal nature markets and see if there aren't some seasonal scans that we can look at. And so we're going to do that here as soon as just a few minutes. We'll let the market open and we'll watch the opening bell, and then we'll run over and we'll see how the seasonal nature of markets are doing, and we'll put some orders on. Hopefully, we'll see. Put some orders on in the stock market. All right. How's that sound? Mostly be doing stock market today. We are looking at the stock market, I guess. Here in the futures market, we're looking at the indexes. My name is Lan Turner, former instructor at the Chicago Mercantile Exchange and Board of Trades Education Center. It's kind of my little feather in the cap, and current instructor at the finance of finance at Utah Tech University, and that's the other feather in my other cap. So that's who I am, and that's why I'm here. I like to do this. It's fun. I have that teaching bug embedded in me pretty deep, and I like to teach. I like to teach people my passion. My passion is trading, and that's what I like to do, and that's what I've done my whole life, basically, I guess, well, not my whole life. I guess since I was in my mid-20s is when I started. So ever since then, I've just been kind of doing this is what I've been doing. I don't really know anything else. I tell people I'm good at working at gas stations. I've done that a lot. So if I didn't do this, I wouldn't know what else to do. So that's my world. And just to give you a little insight, we are looking at the Chicago markets here at the Chicago Mercantile Exchange. This is not the New York Stock Exchange. When trading through Chicago, there's no pattern day trading rules. You can open an account with as little as $5,000 and trade long and short as long as you want, penalty free. And so that's why we're over here. A lot of people want to get started day trading, but they don't have $30,000 to, invest in an adventure of day trading. And a lot of people don't know that you can come over to the futures market and that you can trade these indexes. You can trade the other commodities too. Now, we can't obviously trade single stock futures. We can't go trade Apple, or we can't trade, Amazon or Meta, Facebook, over here in the futures market. But we can trade the indexes. We can trade corn and wheat and soybeans. We can trade gold and silver. We can trade crude oil. We can trade sugar and orange juice. All kinds of really fun things to trade. And you can do it with a small account. All right. So get started, get your feet wet, learn how to trade. Come over here. Let's give it a shot. It's a lot of fun. And the leverage is good. So you can make good money. And there's both mini accounts and micro accounts. So you can work at whatever level you would like. All right. My platform that I'm using, software trading platform, is Track and Trade. You can pick it up, get a free 14-day trial over at trackandtrade.com, and you can come over here and play with us. Do what I'm doing. Just follow along. I'll teach you what we're doing. That's the whole name of the game. Now, you're obviously not going to be able to learn everything that you need to do in one day. And we do a lot of different stuff over here. So we trade options. We learn about options and what those are. Generally, what I'm teaching here in this class is the things I'm teaching down at the university. So I teach the university, and then I come up here and this is kind of put your money where your mouth is. Teach stuff at the university. That's the academic side of things. Then come up here and put them to work. So the bell rang, and that's why the markets are taking off right now. And you got the S&P taking off. This is each one of these is just a 1-minute chart. So we are down here looking at the 1-minute chart. I do have some special indicators turned on. These are Heiken Ashi bars. So they are candlestick bars, but they're Heiken Ashi candlestick bars. So that's what's making the prices, the little trends, look so nice and clean and smooth. And I like that. Helps us be able to identify good places to get in. And of course, first thing in the morning, this is where all the shakeout occurs. This is where all the weekend traders orders are filled. So you have the opening bell, which is really just the kind of the place where they open up the market, and all the trades that had been put in on Sunday afternoon by, people who were sitting on their little iPhones, looking at their iPhones and saying, hey, I want to buy some Apple, or I want to buy some, Microsoft. And they put in an order. That's what's happening right now. These are all getting filled right now as the market opens up, and they fill all those orders. So generally the market rallies and then it flushes. And so doesn't always flush, doesn't always rally. Sometimes it just flushes. That's all it does. Sometimes it rallies and flushes. Usually it rallies and flushes. Sometimes it just takes off, it goes to the moon, and you're like, where in the heck was I? Why didn't I just go to the moon with it when it went? Sometimes that's the way you feel. But sometimes the market just rallies and flushes. So it's very difficult. We've tried to do that in the past here in this class, where we tried to trade the opening bell. And sometimes we make a lot of money really fast, and sometimes we get our heinies handed to us. So it's a difficult time to trade, but we like to watch it and then wait for the market to calm down just a little bit and see if it won't start to trend and give us an idea of which direction to go. And then we can get in and when things calm down a little bit. Doesn't mean you can't jump in here and try and trade this stuff. You certainly can. It's a lot of fun, but like I said, sometimes it's a little dangerous. In hindsight, it looks easy. Hindsight, it looks like, oh man, Lan, you are a lousy trader. You should have been in on this thing. And so I would have been right in right there. That's where I would have got in. If I was trading this market, I'd be rich, rich, rich beyond my wildest dreams already. Well, how much money would you have made if you'd have got in right there on that opening bell? Let's take a dollar calculator and look at that. From this point here to where it's currently trading, that's $560. You're like, what? $560 in 5 minutes? Oh my hell. Why am I not doing this every single day? Well, we do. We do this almost every single day. Come and join us, and you can play along with us. Now, market's going to the moon. It's just really rallying up here. Let me come in here and show you. You say, well, if I made $560, how much did I have to invest? 17,000, 18,000, 20,000? What was my investment? No, you're in the futures market. We're in a whole new world. Let's look at the key right over here. Day margin. You'd have had to put in $750 on that opening bell. So that was a $750 investment. And it's up here right now at, drag that up there at the very peak. We'll just go to the peak just to show you, not that you could get in or out of these exact locations, but that's $680 run right there. $680 run on a $750 investment. So what if you'd have put in two of them? Well, you'd have been up over $1,200, right? Well, over there in their stock market, when I do this, I had to put in $20,000 to make that same amount of money. I know. That's why we're not over in the stock market doing this. We're over here in the futures market. How do they do that over there? Well, it's a little bit more than I want to get into right now, but it's just know that it's possible. It's called leverage. That's what we have over here. Why do they do that over here? Well, it's a little bit beyond the scope of this class today, but it is something I will teach. So stick around and we'll talk about why they do that. Here it is. The NASDAQ starting to kick back. So we're going to draw our trend line in here across the top. That's our boundary for the high point. This is our previous boundary. We're going to put another boundary in over here on the Russell. We got a low. We're going to pop this one in here. So we got this little narrow channel. Oftentimes that Dow just went to the moon, didn't it? Holy cow. But oftentimes what happens is we get these kickouts here in the morning where the market kicks out and then it runs up and then turns around and runs right back down. Well, if it's going to run right back down, then get in and go short on it right now. Well, I'll let you do that. Go ahead. Just get in and get out, as fast as many times as you want. Your broker will love it. Let's go ahead and delete these up here. Those were last week's markers. Should have probably left them. Those are good markers to be watching. Last week's highs and lows of the opening bell. But we're going to kind of watch this little thing go up and where some of these highs and low points are. And that gives us a good place to set our levels. These are our levels. All right. Market's starting to flush, like we said. We'll take a short position here, Lan. You know it's going to flush. Everything else is flushing. This is the lagger. Well, sometimes that works just fine. Let's go ahead and we'll give it a shot. Why not? Let's put that in there. We're going to just do a little bit, but right when Lan gets in, of course, that's when the market turns and goes back up. But all the other markets are falling. Look at the S&P's coming down, the Russell's coming down, the Nasdaq's coming down. It's called intermarket relationship between markets. And oftentimes we'll get the lagger will fall too. So we get in on the lagger and see if it won't fall and come back down too. But sometimes the lagger doesn't want to lag and you get stopped out anyway. Come on, buddy. Rock and roll for us. Make us look good today. Don't stop us out. Everything else fail. Why can't you? Come on. Come on. Don't do that to me. Don't do that to me. Don't stay up there while everything else is falling like rocks. You're supposed to fall too. Come on. Come on. Don't make me put in a stop up there. Get stopped out. I don't want to get stopped out. This market's moving big moves today, right now. You'd think it'd fall, wouldn't you? You'd think it would. Come on. Oh my goodness. Look at that. It's turning around. It's going to go back up. We're going to get stopped out. Don't stop me out, you rotten bugger. I want to actually delete that. Delete. I had put it in there a little bit too close. We're going to do this one here. If it breaks above that high right there, I don't want to stay in there. I think it's going to turn and go back up. How come everything's falling but the Dow, the one we're in? Come on, you rotten dog. Show us some kindness today. We just want to make one trade today, make a little money, then we'll go over and play in the stock market. Man, look at the S&P flushing down off of that peak. Come on, Dow, you can do that too. Just go down here back to the little blue line, magic blue line. That's where we want to see that baby go, right there. Come on, you can do it. You can do it. You can touch it. Come on, touch it, touch it, touch it. Oh, be patient, Land. You have no patience for this. It's the fastest market in the world, and you have no patience for it. I know. I'm A-type personality. I want it to go, go, go. The minute I get in, if it doesn't immediately go in my favor, I want to get right back out. Come on. Look at that S&P. Holy cow. What a beautiful setup that thing was. That Dow being a little on the slow slide there. I would have put in 2 or 3 more right there if that thing would have started to move down, but it's being so slow and lazy. I don't want to put in any more. I'm afraid it's not going to continue to fall like the rest of them. Come on. Come on. You got to break those yellow dots. Everybody else broke the yellow dots. You can break the yellow dots. Come on, I'll let you. I'll let you. Come on, push down there. Break those yellow dots. You haven't even broke the yellow dots yet. Everything else broke the yellow dots a long time ago. You rotten bugger. I'm just taking that one off the table. Come on, you rotten thing. I can't believe that. Can you believe that? Unbelievable. It'll probably go now after I got out. Look at the S&P. Look at the Dow. Look at the Russell. We want to get back in on that Dow. It started to pull back. I didn't dare take it. We want to take a chance. So now we get in lower. Boy, we should have taken the NASDAQ. Should have taken the S&P. We don't generally day trade the S&P, do we, guys? We generally stick to either the Russell or the Dow. Sometimes we'll take that NASDAQ. Sometimes we take the NASDAQ. I got the micro mini here on the NASDAQ. There goes the Dow. There it goes. Come on. Flop down there. Even though I got out, I still want to see it at least do what I was thinking. Keep spiking that yellow dot now. It's pulling back again. Boy, it's holding on. It's making me. Well, if it goes up there and rallies, it'll make me look smart. Don't want it. Holy cow. Well, little Russell down there. We thought maybe he was going to get a little trend out of it too, but nope. Came down and tested that low and just cut it just to say that he could. The big movers are the NASDAQ and the S&P today to the downside. They're flushing like toilets. They did have to rally just a little bit to fill all those orders, people who wanted to buy over the weekend. Look at that. Look at that. Look at that Dow. Boy, that's making me look smart. It's going for an ABC pattern. Why don't you get in for the long position now, Lan? Well, look at that. That's a very well could be. What that thing's going to do is go long now. My bet it's not going to go long, though. My bet. Quit staying that, Lan. The government doesn't like you to call it a bet. I know. My guess. How's that? My guess is we're going to get two little green bars here. Then it's going to flush again. Then it's going to go. Might not ever flush hard, though. Might just kind of die down in here. Who knows? Nobody knows. It's the wheel of fortune. Nobody knows what's trouble I've seen. Nobody knows. All right. Well, it's making me look smart to get out when I did, isn't it? It looks like it wants to fall again. I think it's going to go now. I think it'll come back here and that'll go, but it's weak. The thing is we oftentimes get this choppy down on a nice, this is what happens. The market does this. Nice, beautiful, smooth trend. And you're like, oh my gosh, that's so gorgeous. And then it comes and chop down here. And you're like, oh my gosh, it's so hard to take that reversal. And then it goes, whoom, big, beautiful, smooth trend back up again. And you miss it because you're like thinking it's coming down. So oftentimes the counter trend is choppy. And if the counter trend is choppy, then that's oftentimes an indication that we're going to get a second push and a nice big green run. But where this market's down here, where we got this little pop, and then the nice big red run is down here. Same thing here, up, and then the nice big red run was here. And then this one here is trying to make it's choppy on the way down. Usually that Russell's the one that we like to see gets a nice smooth move, isn't it? Well, what do you guys think? You guys trading the S&P? Michael Bruce, did you put your options on? What's Michael got for his picture today? He's been changing that thing up. He grabs those pictures out of Pitt News Magazine. Every week he's got a new picture for us. That's that guy. What is that? That's that guy out of that magazine that headed to the top of the mountain. All right, what's going to happen here, guys? We're just still flushing down. This is another on the NASDAQ. Man alive. Not good. We're getting a little flag formation in here on the NASDAQ. That's bearish. Because the market's coming down, hesitate. And then usually it'll come out the bottom of that thing. Sometimes it's not, doesn't mean it can't be a reversal. Certainly can. It can reverse and come back and give us a perfect little bow tie. See that little pattern in there? Up, down, up, back, tie it off. That's a bow tie pattern. Okay, market likes to use previous areas of support as next target areas or resistance. So if that thing breaks and goes up, the next target would be that previous low right here. But this is generally considered a continuation formation, and you'd expect the market to fall out of the bottom of this thing. But you're showing strength up here in the Dow. This is strength. This is a choppy counter trend. So you would expect this market to now find a footing and take off and go give us another reflection of this trend here because this is being so choppy. So you have two signals in this one. Let's go talk about the two signals. Let's get rid of all these arrows. It's flushing right now off that Flat bottom ninja. That's what that's called. It's trying to break those red, yellow lights. But see, you have see how it came down here in this clearing bar right there. So a break above the clearing bar would be a buy signal. And a break below the clearing bar would be the sell signal right there. So that is a sell signal. And of course, it's coming in right where the arrow's coming in. Now, in the morning session, when we got a little bit more in the market, those arrows will end up being pretty good. You just generally get in on the arrow, and the market will go right where the arrow did. See, every time of this, the arrow was good, arrow was good, arrow was good. It's like, Lane, get in right now, take it short. Well, sometimes when the market's a little weak, the arrow, it falls, and then it pulls back, and then it goes. So getting in on the arrow sometimes is a fool's errand because it gets you in only to pop right back, create another little high tail, whoop, and then once it creates that high tail, then it falls. You like my sound effects? See, now look at this Russell. Look at how lousy of a bow tie that was. Let's blow this thing up and look at it a little closer. Look at how lousy of a bow tie that was. That bow tie. What's wrong? Wrong finger on the wrong button. There we go. That bow tie, if that was going to be a real solid bow tie to the downside, we would have wanted the same distance from here to here, from the break below this low to the next down, right? Same distance, 390, 390. That's where that thing should have gone. That's a Fibonacci bow tie, right? Fibonacci projection. So we take our Fibonacci tool and we take it from this low right here, which is the first leg of the bow tie. We bring it up here to the B point. We then project down here that the market's going to do 200%, 100 on the upside, 100 on the downside, and then come back to the 100% on this side. So that would make for a perfect little bow tie. See that bow tie pattern in there? That's a Fibonacci move, okay? Fibonacci move from here to here, back to here, and then you tie it off back to the previous low, like that. And so if the market can't do that, which it didn't, right? It's actually bearish. I mean, excuse me. Edit that out. It's actually bullish. It's a bullish trend, bullish move for it to fail to come down that far. It's supposed to come down, come back and tie that bow tie off, and then give you another leg down, and then that would be bearish, right? So you get your drive 1, your drive 2. Well, we're not getting that. Well, land, it doesn't mean it can't go down there. It certainly can. It's got to give us a little ABC in the middle. Well, it certainly does. So we might get this little drop still here and get it to come down there. If it does, this would be just a little micro pullback or, a little flag formation, and we'd see that thing come back. But if it comes back and starts to rally, then that is bullish because you're getting your little bow tie that looks like this. So your bow tie goes up, it comes down, makes a little tiny bow tie, a little crooked one. That's the kind I tie when I make them. When I go to the party, I make crooked bow ties. So if you get a little crooked bow tie like that, and then the market doesn't turn and fall, which we would want it to do, it starts to rally. See, that becomes bullish. And the market goes back up because it didn't have enough strength to push through to make the triangle, right? Triangle on the top, triangle on the bottom. They should be the same. If they're not, and you get this little tiny bow tie like that, that's bullish. So there the market goes. Just like I said. How do you learn that stuff, Lan? Where do you know that? How do you know that? I've never seen that in a book anywhere in my whole life. Well, then you must not have read my book. What do you mean, your book, Lan? What do you mean, your book? Well, I do have a book. It's out on Amazon. Go search for it. Lan H. Turner. This is right in there. This whole lesson right here that I just showed you, it's in my book. You can go see it. Let's see if I can find a section in here on that. Here's where we're talking about the Fibonacci bow tie stuff. Here's the Elliott wave patterns, which goes into, where's the bow tie? It's in here somewhere. This is just flipping through my book, but this is the electronic version, of course. Here we go. Start talking about bow ties. So you can get all this stuff. There we go. There's the bow tie. We're starting to talk about how that all works and the setups and where they're at and the Fibonacci projections, the Kona probability. Oh my gosh, such good stuff in that book out there. If you haven't got the book, you might want to go get it. It's over on Amazon. Just search my name, Lan H. Turner. It'll come right up. All right, here we go. Let's go see what we're going to do now. Now we're going to get the little pullback. Here we go. Maybe we'll get this little ABC pattern right here. A, B, C. Now maybe we'll get that little next drop in this baby, and we'll look for it to shoot down here. Is he going to do it? You never know. And we're not going to find out today. Why not, Lan? Because I'm losing my voice. Hold on a second. All right. Sorry about that. I had to drink a little tea. Well, it's getting a little crazy in here, but we're going to go over to the stock market. So I have to. Today is our seasonals day in the stock market. I just wanted to watch the market open, let you guys see what's happening on an exciting day. Look at this. NASDAQ's breaking while we're over there looking at the trade land. Trade. Well, we are going to go over to the stock market and trade now. You took one trade this morning. That's all you took for $20 out of all those beautiful trends. I know. I tried to trade the NASDAQ, the Dow. I tried to trade the Dow, and it's all, look how choppy. Look how choppy. See, I was smart not to trade. Hang on to that thing. I was a smart trader this morning. Sitting on your hands sometimes is not such a bad trade. All right. Didn't make $1 million, but we'll do that tomorrow. So come back tomorrow. We'll make $1 million. Okay. All right. Let's go over to the stock market. So this is the stock market. Let's bring, why in the heck did I not put this full screen? There you go. Sorry, guys. Everything's small. All right. This is the S&P up in the left-hand corner. Same market we are looking at over in the futures. Of course, this is a daily chart. And up in the upper right-hand corner, we're looking at the Dow. Bottom left-hand corner, we're looking at the IWM, or the iShares Russell 2000. And then, of course, up in the down in the bottom right corner, we're looking at the Qs. And what I want to do today is not necessarily look at them from a daily chart. I want to go in and do the seasonal scans, right? We talked about that. We were going to do seasonal scans on Monday. Well, Monday was yesterday. So since it was a holiday and we were all out at the sand dunes, right? We're out at the lake, we're out at the park. Then today we're going to do our seasonal scans that we missed yesterday. So, all right, up here in the upper left-hand corner, you can see this is TradeMiner Pro, and this is a scanner. And when you trade the stock market, you need scanners. Lots of kind of scanners out there, but this time we're going to use the TradeMiner scanner. All right, so it's built by it's basically an AI system. I know you've heard AI out the wazoo. Well, this is a good wazoo trading strategy. So let's play with this wazoo. All right, so up here, this is our first prompt, and it's all built out for you. All you have to do is just fill in the drop-down boxes. So it says search for trends in the month of. Now we can use symbols. We can put in here symbols, and we can come in here and we can look at whatever we want. We can come into the settings, and we can choose all kinds of things. But for me, just for this simple, just S&P 500, that's good stuff to trade. Those are all markets that have already been picked, and we know are good markets. Otherwise, they wouldn't be in the S&P 500 if they weren't good stocks to trade. So we're just going to stick with the S&P, and we're going to go back to month. I like to use month. Okay, you can use symbol and see the seasonal nature of markets of an individual stock, and I'll let you do that on your own time, or we'll do that another time. Today, we're going to just do the month of February because it's February, and we want to know what we should trade. All right, what should we invest in the month of February? And so we're going to pick February. We could pick any month, of course. We go out here and start looking at March, but we're not going to do that. We're going to look at February. I am going to have some trades. We are going to have some trades in Pit News Magazine for the month of March. And we got some real nice. Oh, I'm so excited for the March issue. It's really, really turning out beautiful. I'm excited for every new issue, but this issue in particular is going to be really fun. We got Jim Cramer in this issue. And you are not going to believe what we got him saying on camera. You are not going to believe it. You're just going to shake your head. You're going to go, oh my. Only you're not going to say heck because you're not being recorded on a YouTube channel. You're going to say, oh my, and you're going to say the whole word. You can't believe what he said on camera. And I got it. I got it filmed. I got the film. I got the footage. And then it's going to be published in Pit News Magazine. Search for trends in the month of February. Find trends that have won at least 80% of the time. Holy cow, Lan, you're being a little on the optimistic side there, aren't you? With 80% of the time. Well, you know, I like good trending markets. If they're not doing what I want them to do, then I don't want to look at them. All right. Trades that have won at least 80% of the time. We're going to look just at bullish. Should we just look at bullish or should we look at both bullish and bearish? We can look at both. If you guys want to take some short positions, buy some put options, sell some calls, you can do that. Let's just keep it simple today. We'll stay on the bullish side of things. I'm going to go meet my brother here in a few minutes. He's come down. He's in town, wants to go out and goof around. He's in town and wants to goof around. Go see my brother. All right, list trends that last at least 10 trading days, but no more than 30 trading days. That's a nice little window, right? We don't want them to be too short. We're not day trading. This is it's still a short-term trade. I mean, it's 10 days. No more than 30 days. We'll keep it within a month's period of time. We could make that longer. We could say, 60 days. But I like, 10, 30. That's pretty good, but it seemed to work good for me. And then we're going to find at least 15 years of history. Whoo! Now, we may have to scale that back a little depending on how many results show up, or we could turn it up, say 20 years of history. This is how many years back this thing has been 80% profitable. So we want it to be 80% profitable over the last 15 years. We're going to remove the same symbol duplicate start dates, and we're going to remove the same symbol overlapping dates. And now I'm going to go ahead and hit search on that. 15 years, 80% bullish, 10 to 30 months February. Okay, everything looks good. Let's let it rock and roll. So we're going to go see if it can find stocks that are 80% profitable over the last 15 years in the month of February. Come on, baby. It's like, it's not gambling. We're not rolling the dice. All right. Here we go. This is our score. The highest score you can get is 5. And the highest we're getting today is 4.81. Progressive. The Progressive. I don't know if that's the insurance. Is that the Progressive Insurance Company, PGR? Between February 6th and February 26th, 82% of the time over the last 22 years, that thing's made on average 3%. So it's been bullish between those time frames. But you know what? We need to not just look at the very first one, because that's February 6th. That's like 2 weeks ago. We could actually go look and see if it actually made money. But we're going to just try and find new things to trade. So since today is the 20th, I'm going to sort by date. Actually, let's not do that. Let's come in here, let's sort by the score. Because if we come over to the neural network, and I'm going to kill all these, remove all those, portfolio step, let's kill all these. Remove. Let's start fresh and new. Okay, fresh and new. All right. So I'm going to grab all the greens. Okay, all the green scores. Now, you can work on that score if you want. You can come in here to your user preferences and see the scores down here. So you can say score weighting. So when you have an AI system, you have to have all these weights, right? And so these are the weights that they talk about. When you're listening to them talk about how they make AI work, they have weights in there, and they put weights on different things. You guys like my Mississippi mug? Oh, you can't see it. It's a Mississippi mug. How do I get it to show my Mississippi mug? Put it in front of my shirt. There, I tricked it. Anybody from Mississippi? MISSISSIPPI. Can you spell it backwards? How many of you can spell it backwards? I know there was somebody in here that was like, I can spell it backwards. All right. Volatility we got in here at 35. The average return is 15. The percent accuracy is 15, and the drawdown is 35. Has to equal 100%, but you can change those weights and make them what's more important to you. All right. And then you can save your settings, and then you can have the defaults. And, it's really kind of a fun little program. You can come in here, do a lot of customization. All right. But we're going to take all these, we're going to add to step 2, and we're going to bring them all over into the neural network. So these are all just the green ones. Now we're going to get rid of, see, it's populating all the ones that have made money, lost money. Oh, here we're populating the data. So we're going to come in here, we're going to sort by date. And since today is the 20th, so 27, 28, 29, 20, 20, 20, 20, 20, 13. So let's take all these that are, well, they're all the blue ones. You can see which ones are making money and which ones aren't. Well, that's pretty cool. You see if a couple of them are losing a little bit of money, but most of them are making money. Most of them are making money. This is all on a $1,000 investment in the stock market, which, it's a good number. Maybe we should put $100,000 in there. So these would show big dollars, but it's all a percent. It doesn't matter. It's which ones are making money, which ones aren't. So we're going to come in here. The black ones are the ones that have closed out. So we're going to get rid of all these. Let's come in here and grab all the ones that have already started working because we don't really care about those. And how do I delete them? Remove selected. There we go. Okay, so these are the upcoming ones. Now, out of these, we've got, let's look at them. Let's look through them. So we got them sorted by date. Now let's sort them by win percent. Which ones have made the biggest wins? That one right there. Digital reality. Digital reality. Let's go ahead and while we're here, see if we can calculate any of these. This might take a bit, and I might have to cancel it because creating all these thumbnails for all these takes a while because it has to go back and has to look at all the history. I got a pretty fast computer, though. Of course, I'm asking it to do a lot. I've still got futures in here. Oh, look at that Dow. Still doing nothing. Everything just kind of died on the vine in here. I guess there was a couple of opportunities to make money in this market today, and I didn't capitalize on them, but you know what? I didn't lose money. So, hey, I'm happy about that. Come back over here to where we were. Man, you get distracted too easy. I get a lot of things going. Too much fun. Too much fun. Okay, see this market? It's up here. It's calculating the historical. It's looking at all the history, and it's saying, hey, this digital reality, I want to see if it's really cool that this stuff has been profitable in the past. Let's see how it compares to today's market. So it's building a thumbnail, or not a thumbnail. I call it a fingerprint. So it creates a fingerprint of all the historical days, all the historical years, all the historical trades. And it lays those all out there and looks at the winners, looks at the losers, and then it creates a fingerprint for today, for this trade. And of course, some of them are further out. So the closer you get to the date, the more accurate the fingernail is going to be. But it'll create a fingernail for out as far as 15 days, which is the rest of the month. So these will all they should all get done. So it's creating a fingernail, and it's telling us whether the fingernail for this year looks more like a winner or if it looks more like the loser. And so then it'll give you a probability. So there we go. So there's our probabilities. Look at that. So now it's coming in here and it says, well, the probability based on my fingernail prints of digital reality, which starts on February 29th and ends on April 10th, 89% of the time over the last 19 years has on average returned 7%. This year looks very low, but we're still 2 weeks out. I mean, 15 days. I went 15 days. That's the 29th. So it's saying as of today, doesn't look like a very good trade out there, Land. Oh, man, we don't start on open. We don't. Today's the 20th. Don't we have anything closer? We don't have anything closer. I mean, these are all starting on the 29th, 22nd. That's in 2 days. And then it goes all the way out to the 27th. Oh, well, I guess it is what it is. I'm not really trusting many of these results because, well, this one says very low on public storage. And that's starting in 2 days. You could run that again. Obviously, you want to run this the day before. You want to run it again tomorrow and see if it changes, but it's sitting there very low. This one's a medium. These are a high, but that's 29. I don't even trust this. This is a week and a half away. You got to run that fingerprint thing the day before. And we don't have anything really the day before. Let's take we got two highs in there. This is not what I wanted. Well, it is what it is. I mean, I can't make things better than they are. So let's grab some of these. Let's just grab them all. Let's forget the fact. Let's just grab them all. Should we just grab them all? Let's take them all and put them over into the portfolio because the portfolio is going to pick them again. So let's go we'll just grab them all. How's that? Remove all. Remove selected. Let's see. How do we move them? Add to pick list. There we go. Now we're going to come over to portfolio. And in here, we're going to tell the computer one more time. We're going to ask the AI to pick what would be. I want to tell it, what's your favorite one? So I tell it one here, and I would like to be in one. Do you want it? No. Let's see. Have been calculated? No. We're going to say, well, they've all been calculated, so it doesn't matter. So we're going to go ahead and tell it to tell us what its favorite one is. We hit auto select, and its favorite one out of the list still has a probability of low, but its favorite one is February 28th to April 10th, 81% of the time over the last 26 years. MKC, or McCormick Company, has been bullish between February 28th and April 10th. All right, that's MKC. So we're going to go over and we're going to say, let's create a new one. So we're going to call this seasonals. Hit OK. Oh, now I forgot. MKE, MKC. All right. So we got to put in here MKC. McCormick. All right. So it says between February 28th and April 10th, 81%, 6% return, February 28th to April 10th. So let's draw a line in here. February, well, that's not for 28. That's not for another week, but another week, February 28th, right out in here. So wherever the price is at on February 28th, it says it's going to be by April 10th, it's going to be 81% of the time it's been moved above that line, 6%. So 81% of the time by April 10th. Where's April 10th? March, April, 7, 8, 9, 10. Oh, I was telling you about Pit News Magazine. And then I got excited because I was telling you we got Kramer on video that you're not going to believe. Can't believe it. But I was telling you we're going to have some nice seasonal strategies in there, just like last time. But we got a better one this time. We got a really good. You're gonna like it. You're gonna like it. What's Pit News Magazine, man? I don't know what you're talking about. I'm new here. What? You're new here and you don't know what Pit News Magazine is. All right. For those of you who are new here, Pit News Magazine is an amazing multimedia magazine that we put together here because of my passion. That's what I do. That's how I stay in touch with you. And we have a magazine where you can listen to it. All the articles have voice, so you can listen to them. You can read them, and many of them have video. And one of the ones that's going to have video this time is going to have Jim Cramer on it. You guys are not going to want to miss it. You can't believe what we caught him saying. All right, so that's Pit News Magazine. Go over, pick up a copy, pitnews.com. You get the first 3 months for $1. 3 months. You get the Jim Cramer one. If you just get the Jim Cramer thing. Of course, we're going to have him in 2 months. Hey, he's going to be on next because we got more video than we can put in the first issue. So next issue, we're going to have the rest of what we caught him saying. So we're going to in 2 issues have Jim Cramer. So you get those 2 for $1, and then you could cancel if you want. If you don't like Pit News Magazine, after $1, 3 months, cancel. But I think once you get it, you're going to be like, oh my hell, I am never canceling this thing. I am going to keep it for the rest of my life. It is so amazing. All right. So go get Pit News Magazine and join us. It's really super awesome. All right. So what else does Pit News Magazine have in it? Oh, mostly just lots of articles that teach you lots of trading strategies. That's what it mostly focuses on. Trading strategies. All right. And people's experiences trading. We like to hear how other people do it. So that's good too. So that's what we're looking for. This thing here, this is McCormick. It's got to be up in this box here somewhere. It says it's going to be in this box right up in here somewhere. So that's what we're going to expect. All right. So given that, what's the probability it's going to be in that box, Lan? Well, it says it's got a probability of 81%. 81% of the time over the last 16 years, it's gone into that box. So, hey, well, let's watch it. See if it goes in the box. That's what we're doing here, right? What's the next one? Let's tell it we can be in 2 this time. And to pick one more, auto select. Its next favorite one is LIN. Lindy PLC. So that one's starting February 29th. So February 29th till April 9th, 81% of the time over the past 26 years, 41 calendar days average. It says low though on the probabilities, but I don't trust that probability thing because that's still, we're still like a week away. We're still a week away. All right, so let's come in here and go take a look at Lin. L-I-N. So L-I-N. There's L. Ooh, look at that baby rock and roll on a daily chart. That thing is moving. We got our nice little drive 1, drive 2, drive 3 happening here. Look at that spiky thing. Spiky dikey do right there. Okay, it's taking off going to the moon. Maybe says let's go see what our dates are on this thing. February 29th to April 9th. February 29th to April 9th. Let's go find our February 29th to April 9th. February 29. So we don't know what this line's going to be because it's got to be at where it's currently trading on the February 29th. So you wait till February 29th and then you draw this little square. So that little thing I did here, this is not true. Don't believe that because you have to wait. You have to draw this little square on the day that it says. I'm just doing it early, giving you a heads up because we don't have anything for today. Closest thing we got is next week. So you're going to have to readjust these boxes, but that's kind of the idea, right? So February 29th, April 10th, February 29th. So we'll kind of pull it out here. Oh, that was right there. February 29th, April 10th. April 10th is our box size. And we're going to have to adjust this box depending on where it's currently trading. And then right there is so we'll take that little T-square at some point and adjust it on the day. And then we'll draw our little box in there. So we don't know. We don't know where it's going to be, but there it is. We got percentages in here. We got dollar value. I think I asked the programmers to put percentages in there so I can have that be a percent, and then we can see how big the box is supposed to be. It's supposed to be doing that for us. All right. Let's come back in here. Okay, what's the next one? That's what we need to do. Lan, you're getting distracted again. Here we go. Let's do 3, 1, auto select. What's our third one? MKC, McCormick and Company, February 28th to April 10th, 81% of the time. Oh, wait a second. That's the one we did. Lindy, Extra Space, EXR. Oh, wait, which one did we do? Yeah, EXR, Extra Space Storage, February 29th to April 10th. People like to store their junk, all their extra stuff. If you got extra stuff, go to Extra Space and store it. Went and saw it. It reminds me, I went and saw this comedian. What do they call it? You go to a comedian and watch a comedian. Anyway, He was like, yeah, people put all their junk in extra storage spaces, and then they put a lock on the door that's worth more than all the stuff that's inside. They buy they buy a lock to lock it up with. It's more expensive than all the stuff that's inside the extra storage space. Are you like that? Do you like to store stuff and keep it forever? Are you one of those guys that likes to throw everything away? I'm one of those guys that throws everything away. I don't have anything. All right, extra space storage. I guess I have a few things, but I don't spend extra money for extra space. February 29th to April 10th, 83% of the time over the last 18 years. The others were 26 years. This one's 18 years. 42 calendar days, 7% returns, a little higher return. Average profit, $68 for every $1,000 invested. That's no margin, okay? If you do an option on that, it'd be quite significantly higher. This is the real estate industry. So February 29th, again, we're going to do basically the same thing. So February 29th, April 10th, extra space storage, EXR. EXR. Oh my goodness, look at that. Wow. Wow, wow, wow. What a market. That baby's making some trends. That market knows how to trend. So this is just saying that it's made a nice big rally. This is on the counter trend in here. And at some point right in here, it's going to draw a little T-square for us. Have our date line, and then we'll have our vertical line. And then we'll have our profit box. Of course, don't want to discount the fact that it can have a drawdown, right? It can have a drawdown box too. These markets oftentimes have drawdowns, so we got to make that red. Don't want to ignore the fact that we can have red bars, red boxes. Because if you go back and look at the, see the drawdowns down here? Like 2009 had a pretty nasty drawdown before it finally went back up. And so this one here, 2020, had a real nasty drawdown. I mean, it came back and kind of gave most of it back, but not enough to be profitable. But it was in a profitable state at one point. And if you look at this, this is like it's a candlestick chart. So it tells you the high, the low, and the open and the close. And so it tells you kind of where this thing played through. You see this one had a little drawdown. This one had a little tiny drawdown. This one had a drawdown before it turned and went profitable. So they do draw down. So sometimes, they don't just go, oh, well, it's the date that it starts and boom, go straight up. Doesn't do that. Some, most of them have a little drawdown and then will go up, or, a big drawdown and then they'll go up. So watch that, because you can take advantage of that too. I mean, if it's getting what, 6-7% return, it's giving a 6 or 7% return inside that box. Well, that's still from the opening start date, right? So you got your line across there. That's the opening start date. If the market goes clear down here and then turns and goes up into the box, well, you could pick up an extra percentage or two by playing the drawdown. I know a lot of guys that like to do it that way. So, be a little bit more thoughtful about how you attack these markets. But these are basically seasonal trends that, these markets have had a tendency to do the same thing over and over and over again. There's 3 of them for you. So we'll take that and run. There's our 3. There's extra space. There's Lindy. There's Lindy. That's what we're going to expect. We don't know where Lindy's going to start. We're going to have to redraw our box, right, in a week. But that's the best we got. And we'll come and look at them again. I guess we'll come and look at them again on Monday, because we're going to do another scan. I don't know if it's going to do us any good to do another scan. It's going to be the same thing. I guess we'll come and look at them, right, and see if these 3 show up as our favorite 3 in a week, because they may not be the ones that show up as the best ones in a week. The AI may change its mind and decide it likes something else better. But we got none of these are going to work this week. We don't have any. Well, I guess we got one, don't we? Which one? We had one that starts. Oh no, these are all next week. It picked all of these for next week. It doesn't have anything for this week. Which, in fact, we don't. 22nd is on Thursday. That's that one. PSA. Let's go look at it. Public storage. Oh, these storage things. PSA. Is that what it was? PSA? Yeah. Public storage. This one starts in 2 weeks. Now, it starts in 2 days. Over the past 16 years, this thing's been bullish. It says very low probability this time, though. I don't know. Still looks pretty darn good. That's a nice rally. A little pullback. We could get a continuation of the uptrend. We got some accumulation down in here. Another accumulation. I don't know. I'd watch that one. Let's watch that one. We'll keep our eye on that one because it looks like it wants to go again. Maybe. The AI is just saying be cautious, but this looks like a nice technical setup for us. All right, we'll watch public storage, PSA. Looks like this is the year. This is the season for storage. Storing your junk. Two storage companies showed up in this time, which is what you would want to see in a seasonal trade. You want to see that multi-market alignment. All right, guys, let's come down and say hello to a few people. There we got old Bruce saying hello. It's nice to see you, Bruce. Michael Bruce says good morning. We got Kirk Schwartz saying good morning. Randy saying good morning. We got David Lumberg saying good morning. Larry McIntosh says good morning. B. Taylor says good morning. We got Rock Steiner in here saying good morning. We got way ahead of you, Lan, on the options. Michael Bruce. What'd you get, Michael? How'd your options come out? We got Brian Johnson saying good morning. Michael Bruce Arce. I can't spell Mississippi backwards, but I do have the forward spelling burned in my brain because my third grade teacher made me write it in the chalkboard 100 times. I'm only guessing that the reason you had to do that was because something that happened on the playground, probably not to make you learn it, probably to punish you for something else, right? IPPISSISSIM. That's backwards, right? IPPISSISSIM. All right, guys, I'm gonna go see my brother, and we'll let you go. Wait, what? Oh, don't leave that land. Wait. Go see what the markets are doing over here. They're not doing anything. You didn't even look at the news, Lan. Well, there wasn't any. There's the news. Look, nothing. I had to go down to impact 1 to get anything to show up. You go impact 2 in the news, doesn't have anything till tomorrow. And we got FOMC meetings tomorrow at noon. So let's make sure we all keep that in mind and watch that. But for now, the markets are being a little slow and lazy. So be careful. Might want to go sell some options premium. Go follow Michael Bruce's advice and sell some options premium. That might be a good thing to do right now. All right, guys, I'm going to go see my brother. See you guys tomorrow. Take care.